What if one day you woke up to headlines announcing that the US government had invoked the Defense Production Act on silver? At first glance, that might sound like science fiction or an overreaction to market volatility. But when you take a closer look at silver's role in modern technology, defense systems, and energy infrastructure, the idea becomes far more plausible. Silver is not just a shiny metal used for jewelry or investment coins. It is a strategic material woven deeply into the systems that power economies, militaries, and the transition to renewable energy. Exploring what would happen if the Defense Production Act applied to silver opens a window into how fragile global supply chains really are, and how quickly markets can change when national security enters the picture. The Defense Production Act, often shortened to the DPA, is a U.S. law that allows the federal government to prioritize and control the production and distribution of materials deemed essential to national defense. Historically, it has been used for steel during wartime, for energy resources during crises, and more recently for medical supplies and semiconductors. The key point is that the DPA does not require an active war to be invoked. It only requires a determination that a material is critical to national security. Silver already plays a quiet but essential role in defense electronics, missiles, radar systems, satellites, communications equipment, and advanced weaponry. Without silver, many of these systems would simply not function as designed. Silver's unique properties make it especially important. It is the most electrically conductive metal known, which is why it is used in high-performance electronics, where reliability and efficiency are non-negotiable. It is also highly reflective and resistant to corrosion, making it useful in aerospace, solar panels, and precision optics. Modern defense systems rely on these properties every day, often in quantities that seem small per unit, but add up dramatically at scale. A single fighter jet, missile system, or satellite may only use ounces or pounds of silver, but across thousands of units, the demand becomes enormous. Now imagine a scenario where global silver supply is under stress. Mining output declines due to environmental restrictions, labor shortages, or geopolitical instability. At the same time, industrial demand surges because of the rapid expansion of solar energy, electric vehicles, and advanced electronics. Add to that rising geopolitical tensions, where governments become more concerned about supply chain independence. In such an environment, policymakers might begin to see silver not as a commodity, but as a strategic vulnerability. If the Defense Production Act were applied to silver, the first and most immediate effect would be prioritization. Certain industries would receive priority access to silver supplies, particularly defense contractors and critical infrastructure manufacturers. This could mean that civilian industries, including consumer electronics and even investment demand, might be pushed to the back of the line. Refineries and suppliers could be legally required to fulfill government contracts before selling silver on the open market. This alone would fundamentally change how silver is traded and allocated. Another major consequence would be government influence over production. Mining companies could be instructed to increase output where possible, even if it meant operating at thinner margins or accelerating development timelines. The government might offer incentives, subsidies, or guaranteed purchase agreements to encourage higher production. At the same time, environmental and regulatory hurdles could be fast-tracked or temporarily relaxed in the name of national security. While this might boost supply in the long run, it would not happen overnight. Mining projects take years to develop, and silver is often produced as a byproduct of mining for other metals like copper, lead, and zinc, which limits how quickly output can be adjusted. The impact on prices would likely be dramatic. Silver markets are relatively small compared to markets like oil or gold. A sudden shift in demand prioritization or supply control could cause sharp price movements. If investors believed that silver availability for private ownership was at risk, panic buying could occur, driving prices higher in the short term. On the other hand, if the government imposed price controls or restrictions on private trading, it could suppress prices artificially while creating shortages. History shows that when governments intervene heavily in commodity markets, unintended consequences often follow. Investment silver would be especially affected. Coins, bars, and exchange-traded products rely on the availability of physical metal. If refiners were required to divert silver to defense uses, mints might struggle to source enough material to meet retail demand. This could lead to higher premiums over spot prices or even temporary suspensions of product sales. Investors might find that owning silver becomes more complicated, with increased scrutiny or reporting requirements. While outright confiscation is highly unlikely, tighter regulations could change how silver is bought, sold, and stored. International implications would be equally significant. The United States is not the world's largest silver producer. Major producers include Mexico, Peru, China, and other countries with their own strategic interests. If the U.S. treated silver as a strategic defense material, other nations might follow suit. Export restrictions could be imposed, and global trade flows could be disrupted. This could fragment the silver market, leading to regional pricing differences and reduced liquidity. In extreme cases, silver could become a politically sensitive resource, similar to rare earth elements. The renewable energy sector would face difficult choices. Silver is a critical component in solar panels, and global efforts to expand renewable energy already place significant strain on silver supplies. If defense needs were prioritized over civilian energy projects, solar expansion could slow, at least temporarily. Governments would be forced to balance national security with climate goals, a tension that is already visible in other resource debates. This could accelerate research into silver substitutes or more efficient recycling technologies, but those solutions would take time to scale. Recycling would suddenly become much more important. Silver is highly recyclable, and large amounts exist in old electronics, industrial waste, and scrap materials. Under a Defense Production Act scenario, recycling programs could be expanded aggressively, with government funding and mandates encouraging higher recovery rates. Companies specializing in metal recycling could see increased demand and strategic importance. However, recycling alone would not be enough to fully offset supply constraints, especially during periods of rapidly rising demand. Public perception would also play a role. Many people still think of silver primarily as a precious metal or an investment asset. Seeing it framed as a national defense resource could change how it is discussed in the media and perceived by the public. This shift in narrative could influence policy debates, investor behavior, and even cultural attitudes toward resource consumption and security. The idea that everyday technologies depend on a limited and strategically important metal could spark broader conversations about sustainability and resilience. Historically, when governments invoke emergency powers over resources, the effects linger long after the crisis has passed. Even if the Defense Production Act were applied to silver temporarily, it could set a precedent. Markets might permanently price in the risk of future interventions, leading to higher volatility and risk premiums. Companies dependent on silver would likely seek to diversify their supply chains or invest in alternatives to reduce exposure. This could reshape entire industries over time. It is also worth considering the legal and political challenges such a move would face. Invoking the Defense Production Act on silver would likely trigger debate in Congress, pushback from industry groups, and scrutiny from investors. Questions would be raised about definitions of national security, market fairness, and government overreach. While the DPA gives the executive branch broad authority, its use is not without controversy. Any attempt to apply it to a widely traded commodity like silver would be closely watched and legally tested. From a broader perspective, this thought experiment highlights how interconnected modern economies have become. A metal mined in one country, refined in another, and used in products sold worldwide can suddenly become a focal point of national security strategy. Silver's story is not unique in this regard, but it is particularly striking because of how quietly essential the metal has become. Most consumers rarely think about the materials inside their devices, vehicles, or energy systems, yet those materials underpin everything. In the end, The question is not whether the Defense Production Act will definitely be applied to silver, but whether the conditions that would justify such a move are becoming more likely. Rising geopolitical tensions, supply chain fragility, and accelerating technological demand all point in that direction. Silver sits at the intersection of defense, energy, and technology, making it uniquely exposed to strategic considerations. Whether governments act on that reality remains to be seen, but the implications are worth thinking about now, before a crisis forces rapid decisions. Imagining a world where silver is treated as a strategic defense resource challenges many assumptions about markets, investments, and resource availability. It reminds us that prices are not determined by supply and demand alone, but also by policy, power, and priorities. For investors, manufacturers, and everyday consumers alike, understanding these dynamics is becoming increasingly important. The future of silver may depend less on geology and more on geopolitics, and that shift could redefine its role in the global economy for decades to come.